Good afternoon, everybody. I wanted to take some time and just go over some key elements for this week's upcoming exam. This will be your first exam in Accounting 2102. And I wanted to talk about some ideas in Chapter 14 and Chapter 15 that you got to be thinking about when you take my test. The first thing I would definitely know is on page 760, where they break down manufacturing costs, direct materials, direct labor, and manufacturing overhead. Really know what makes up your overhead. Now, all three of these costs are known as a product cost. That's what makes up the actual cost that goes into the product. So you got to realize that anytime you see a cost that has the words factory or plant included in the cost, that it's part of the product. And if it's not direct materials or direct labor, it's got to be manufacturing overhead. For example, depreciation in the factory or depreciation on plant equipment, that's factory overhead. So please be aware that factory overhead costs mainly consist of costs that have the word factory or plant included in the cost. Now, you're going to have to distinguish on the exam between product cost and period cost. Well, obviously, period cost would be any other costs that are not included in the product. And those costs would be, examples of those costs would be like administrative and operational expenses, maintenance expense, any cost that you would not have in the plant. In other words, if it's in the president's office, or if it's in the payroll department or the personnel department, or any administrative costs, those are all period costs, and they get expensed directly on the income statement in the period that they happen. And the big difference between, of course, a product cost and a period cost is once a product absorbs the three costs and goes to the warehouse and sits in finished goods inventory, it is an asset, finished goods inventory, until it gets sold. And when it gets sold, it turns into an expense, cost of goods sold. So that's the whole concept and the whole theory behind product costs and period costs, and you definitely got to know the difference between those two. Probably the first 6 or 7 pages of the chapter, you need to read those pages and pretty much, memorize. I probably will ask something on the organizational chart, something about treasurer or controller. I know there'll be some questions probably on management accounting, the difference between management accounting and financial accounting, but mainly in this chapter, the introduction of product cost, the introduction of the 3 inventory accounts, raw materials, work in process, and finished goods, and the introduction of the new statement. You are familiar with the income statement and the balance sheet, but there's a new statement called the cost of goods manufactured statement introduced in this chapter. And basically what it is beginning work in process plus all your product costs minus ending work in process gives you the cost of goods manufactured. Okay, that's the overall cost of goods manufactured statement. If you just know that formula, you'll be fine. Now, don't forget that anytime something goes from cost of goods manufactured from work in process to finished goods, it's labeled cost of goods manufactured. So If a product gets finished in the period and moves out of work in process over to finished goods, that movement is the cost of goods manufactured. Okay, that cost of goods manufactured is moving from work in process over into finished goods. Okay, and that's important to know because you'll probably see one or two questions about that on the exam. Now, in chapter 15, and let me just go over to chapter 15. The big difference in chapter 15, well, of course, you have to know the difference between the job order costing system and a process costing system, and that should be on the first couple of pages in the chapter. Job order costing system, of course, is every job is unique, where a process costing system would be a system that every item that gets a cost attached to it is the same item, such as Coca-Cola, oil, anything that gets a cost attached to it that's all the same is a process costing system. This chapter is mainly concerned with job order costing. We will not be talking about process costing system in this course. I just wanted to let you know that I want you to know the difference. But mainly in this chapter, the big difference, it talks about work in process, it talks about finished goods, it talks about raw materials, but the big difference will be back here on page 809. Page 809. If you go to manufacturing overhead costs and you read on 809 over to 813, it will show you how we create a predetermined overhead rate using the estimated overhead that we think is going to happen for the upcoming year, and we put that over what we call an estimated base. Now, if we have a company that has a lot of employees working, that base will probably be either direct labor hours, estimated direct labor hours, or estimated direct labor cost. If we have a company that doesn't have very many employees but has a lot of machinery running, then we will use estimated machine hours for the base. Now, the big thing to remember, whatever base you use, when you go to apply overhead to the job, you must use the actual base that you used when you calculated the rate. So, for example, if you used estimated direct labor hours as a base, when you go to apply or allocate overhead to the job, you have to look for the actual direct labor hours that were used on that job, and you take your overhead rate that you calculated and you multiply that overhead rate times those actual hours that were used on the job. And that's the big difference in chapter 15 when compared to chapter 14. Now, we were just putting overhead into work in process in chapter 14, but in chapter 15 now we are allocating or assigning overhead to work in process. So to assign or to allocate overhead in work in process, you have to develop what's called a predetermined overhead rate, and this always happens before the year actually starts, because both the numerator and the denominator are both estimated amounts. So what you're doing is you're looking at past actual amounts and you're estimating for the upcoming year what you think overhead is going to be and what you think how many direct labor hours or how many machine hours you're going to use. And that's the big difference between Chapter 14 and Chapter 15. I mean, they're pretty much identical. Job order costing uses the same accounts: raw materials, work in process, finished goods, cost of goods sold. It's it's pretty much the same thing, except this allocation of overhead. Now, one thing to be aware of, the adjustment to the manufacturing overhead account. If you look back here, on page 820, where it says under or over applied manufacturing overhead. Okay, you need to know now that all the actual overhead amounts in that account went on the left side, or the debit side. So as you went through the year and you got your bills in, your utility bills or your rent bills or whatever, and they were actual amounts of factory overhead, you debited that manufacturing overhead account. Okay, but when you applied overhead and used your rate and multiplied it times those actual direct labor hours or actual machine hours, whatever you're using, and you debited work in process, the offset then was a credit to that manufacturing overhead account. Okay, so at the end of the year, what you're going to have is you're going to have a balance on the debit side of that manufacturing overhead account, and you're going to have a balance on the credit side, all your applied overhead. Don't forget, the left side of the account is our actual overhead amounts. The right side are applied overhead amounts. Well, what you have to do is you have to balance that account and close that manufacturing overhead account out, because it's just a temporary account. So let's just do an example. Let's say you have $50 of actual overhead costs on the left side of the account, and you have $40 of applied overhead on the right side, or the credit side of the manufacturing overhead account. Okay, you actually under applied. Okay, you should have applied $50 because that was the actual overhead cost. But what you ended up doing, because you wanted to get the job finished and out the door, you applied $10 less. So what you have to do is you have to credit the $40 to make it $50. Okay, so each side's the same amount. And when you credit the manufacturing overhead account, you have to go to cost of goods sold, and you have to debit cost of goods sold, which increases cost of goods sold. Okay, so now you have the right amount of cost. You have the right amount of overhead cost that you see. What you should have did is applied $50, but you applied $40. You under applied. So to true up the cost, you have to increase the cost of goods sold by $10. And that's very important to understand. I know there's 2 or 3 questions on the exam concerning under and over applied overhead. Okay. Now, if it's over applied, if you applied too much overhead, then of course you would credit cost of goods sold, and you would debit the overhead account. Okay. You have to close that overhead account out to 0, which means each side has to equal. That the same amount has to be on each side, which closes it out to 0. And if you credit the overhead account, you debit cost of goods sold. If you debit the overhead account, you credit cost of goods sold. But I guess what's really important to remember here is that whenever you are closing that overhead account out, you're always closing it out to cost of goods sold. So basically, 2 big things: the predetermined overhead rate and the allocation of overhead to work in process to the job. And don't forget, the job now is work in process. When the job gets finished, it moves into finished goods and sits in finished goods until it gets sold, and then it moves out of finished goods into cost of goods sold. Okay, that's the first big thing in chapter 15. And the second big change is this balancing of the temporary manufacturing overhead account to cost of goods sold. Now, that should be enough. You need to know, of course, the difference between direct and indirect cost. Okay, you really only have two direct costs, and that's direct labor and direct materials. And your indirect costs would be all your overhead costs. Okay, so your direct and your indirect costs make up your product cost, and then your period costs or your administrative, operational expenses, sales expenses, marketing expenses, any other costs that do not take place in the factory or the plant. Okay, I want to wish everybody good luck. I will be in town this weekend if you want to give me a call with the exam. The exam starts Saturday morning at 8:30 a.m. and it ends Monday night at 11 o'clock p.m. But you need, if you're gonna take the exam Monday night, you need to start the exam at 9:30, no later than 9:30, because it is an hour and a half exam. Thank you very much.